Hello and welcome to this week's Elite webinar. I'm Riz and I'm happy to be back for another weekly webinar. We are looking here at the S&P 500 starting off quite bullish continuation, as you can see, pretty much every day as of last week. For the week prior was green, a contrast to the week prior that before that. So once again, market chugging along, coming back up to near all-time highs of around 6,001 as per the closing price. So we'll go with that. So it's very, very close, 5 points away as of Friday's close. So that looks very bullish as well. Going into it, we have our next support area, of course, around 58.50. And then I guess you can say the 6,001, 6,000, let's go with, is going to be the resistance area, okay, as of the close. So uh that's that kind of getting once again a little bit overbought. But you know what, that doesn't really matter too much as of right now. We're going to be, we got one last week, this coming week before we enter the final month of 2024, and we know that the last month Santa Claus rally is a potential. When seasonality with all that's occurred, election year and all that jazz, when we factor everything in, especially with price action where the market is right now, I think a case can be made that we could continue to see the market move up, right, going higher. So the last month, my projection, again, there's no hard guarantee for any of this, but I would say we could potentially move between two levels. So I'm going to actually use the ruler here to give you an idea. So the two levels that I'd keep in mind, whoops, are 60, 50 for the last month. Again, it's not going to be precise, but let's just go with that. And I think we can move between these two areas here. So roughly 4%, within this 4% range is what we can move until we see the start of the year. Okay, so there is that 250 point area. Okay, that we can kind of see a movement within. That's my projection that we'll see for the end of the year. I'm not anticipating like, like 60, 200 or something like that. I don't see any reason for it to get to that point. In my view, we're already pretty lofty in terms of where the market is. And of course, I will shed some light on the inner workings and the sectors that we see of the market a little bit more closely now. So we have here the year-to-date sectors. Let's close that, give you a little bit of a better look here. Let me zoom out. Okay. So we have financials rocketing to the highs from a performance standpoint here. Here we go. Very much in line with communications, pretty much a tad bit up above communications, but for all intents and purposes, pretty much the same. So financials and communications, you got the Apples and Google's fitting into that, very much leading the charge, and then followed by utilities, surprisingly, actually, also above the S&P 500 SPY index ETF. So the market, you can roughly say it's up about 26% year to date, all right? And followed by that, we got XLK, which is tech, and then XLY, which is consumer discretionary. So those are the key performers. And then everything else, I think you can make a case for obviously being an underperformer, still above the green line, is energy. XLP is the consumer staples, XLRE real estate, and then XLV, the worst performing sector in the S&P 500, is the healthcare sector. It did pick up this past week, but nonetheless, very much underperforming and very muted in that sense. So it'll be interesting to see. I doubt it's going to change too much leading into the last month of 2024, but it'll be interesting to see if we, in 2025 at least, get a momentum or move out of some of these other sectors, especially things like financials and communications and utilities, into the healthcare sector. So maybe some sector rotation to be specific. So that'll be interesting to see. but I'm not anticipating anything specific or major for the remainder of the year. Moving on to oil, take a look at that. Once again, this week bounced up above that 68 area, 68, 69 mark, and then back above 70, right? So very, very, very strong support. You can see going back to all the way to 2023, even if you go back further than that, obviously 2022 was very high oil prices, but you can see this is a very, very important area. It seems almost like ages ago when we had oil, go very, very briefly negative. It's not showing it here because the futures market has a close, but uh, that was a sight to behold or a time to be alive, sure, but a time to be trading. What a time it was. Now, with that said, look at gold here, right? A very, very steep recovery, much steeper than I anticipated. I had this key 25 area, so to speak, as a potential support the last time we had some consolidation here, but it didn't even get there. We had it hit about 25.65 area and then just rocketed up, which is quite surprising. It kind of is in duality as to, like I say, markets giving different signals. Oil kind of languishing, gold was just off to the races. Big, big drop, but then a sharp recovery, right? So let's take a look at where that bottom was, right? So it was dropped about 8% in a span of a week and a half. Okay. And then it recovered from there about 5.5, 6% just in a week from there. So that is quite a significant move in gold. It does not move like this. It does not move how we've seen it move this year or even the last month. It's very much volatile and interesting to behold. Moving on to the bond yield, you can see continuing to stay elevated. You could, if you really want to look at it from a trend line perspective, clear uh, trend line upwards there, right? It with different degrees of velocity and slope. Some of it, for example, the teal or not, yeah, I guess it's the teal color, is the 30-year, right? The 30-year consolidating a bit, but all in all, it's been on an uptrend, okay, which is at odds with the rate cuts that we've gotten. And there, as we head into December, there is a Fed meeting, as I mentioned before, there is a Fed meeting, but after Powell's prior remarks, I believe it was not, I think it was a week prior, where we saw the red days in the market, that whole week. Powell did say things are looking strong. They have done a few cuts, one giant or jumbo cut, 50 basis points already, and then obviously a 25. We may not see a cut in December, might see a hold. Okay, so the market, the bond market especially, is pricing that in a slower than anticipated decrease in rates. Moving on to the US dollar index, look at that breakout. If you really want to, I mean, that kind of stuff doesn't apply too much to things like these or bond yields or whatever, but it's still interesting to see breaking out above, right? It's very strong US dollar, especially after Powell's remarks of a potential hold, right? So once again, I will remind you that decreasing decreasing rates usually has a bearish kind of a weakening result on the US dollar. But with all things going on with the election, Donald Trump's win, and then potentially tariffs, which usually bolster the strength of the US dollar, that's why we're kind of seeing this continue as well. Okay. And a slower rate cut environment potentially heading into 2025. I believe the market's looking at only about two rate cuts for 2025 as of now, if I'm not mistaken. But of course, that will be a moving goalpost that will change. For now, the economy does look very strong, continuing to see, you know, unemployment levels relatively low. We've got jobs and payroll numbers good. We've seen inflation obviously come down as well, not quite to that exact 2% area, but very much near the levels that the Fed wants it at. And of course, the election catalyst is done, and we are now getting into the holiday season. So it's kind of extraordinary to see where the market's at. I did not expect it to be anywhere near these levels, but here we are, once again, knocking on all-time highs doors and the 6,000 level, right? What I will say also, as I open up and bring up the earnings calendar along with the events for the week, please type in any questions if you have them. So let's start with the earnings calendar. Earnings season is done. As you can see, we have this short trading week due to Thanksgiving in the US and, of course, on Thursday, right? And so we have a few names, notable ones releasing this week. Zoom, of course, we are on Zoom for this webinar. So that'll be interesting to see. Obviously, the darling of 2020, 2021, massive, massive rise during those pandemic type of years. So, and nothing else really looking enticing to me. After that, we got Abercrombie and Fitch. Back in my time, this was the Aeropostale, and this were the two leading, I would say, retailers, clothing retailers from my age group. Again, back in the day. But yeah, nonetheless, interesting to see. Kohl's once again, but a retail Target last week got absolutely decimated. So that was quite unfortunate, quite the contrast to Walmart, for example, that's also released. And but let's see how does. Best Buy in electronics retail, so that'll be interesting to see. This also had a tremendous, speaking of 2020, 2021, also did very well, obviously, with everyone factoring in working from home, needing their own laptops and home setup. So quite the when I look back, when I think back, I'm like, oh my God, like wow, like was that even real? Like, was that even a time? Was that even a thing? And it was, these crazy, like these two stocks, I remember watching them, Zoom and Best Buy, like they were going crazy, like absolutely nuts. But it was a sign of the times. Macy's as well, clothing retailer. We have Dick's Sporting Goods, and then Burlington, also retail, right? Mostly for home, all that kind of stuff. Analog devices, something to keep an eye for semis. Dell computers, right? Servers, all that kind of stuff. CrowdStrike is a big one when it comes to um, OPSEC, IT. I'm kind of blanking on the word. Um, what is that? Like someone remind me here, but I think that's like cybersecurity. There you go. Perfect. That's the one. Thank you, Stefan. We got Autodesk as well, HP, Urban Outfitters. Again, mostly retail, all right, on Wednesday. Um, Cyberpunk, Jazz, yes. Mostly retail, okay, mostly retail. But then after that, honestly, Wednesday is nothing really special. On Friday, nothing special either. So keep in mind, Thursday is the market is closed. Moving on to the event. So we do have some macro related events coming in, especially on Wednesday. So Tuesday, 2 p.m. Eastern is when the FOMC minutes are going to release. So of the last Fed meeting, we're going to get the minutes of that. The algos will be on top of that, just picking up any kind of verbiage or I would say hot words, key topics, keywords in the minutes of that last meeting. Okay. What's going to be interesting on Wednesday, we got the second, first, most importantly for me, the second quarter over quarter estimate for the Q3. So we're going to get Q4's GDP numbers next year, but we're looking at the quarter three, so second estimate. We're going to expect about a 2.8%, 3% area. Previous estimate was 3%. We're expecting 2.8, maybe could be a revision lower. Let's see. We have durable goods and PCE, not too concerned with that. Personal income and personal spending, that's yeah, I think you could make a case for that being important. Uh, Maybe a slight decrease there on forecast and consensus compared to previous. Again, this is for October, right? So next month we're gonna get November's. numbers. And then last but not least, on Monday the following, we're gonna get ISM, right? I think it's picking Monday because we got Thursday and Friday no releases. Okay, so that's that. Flipping back to the charts and questions. So let me scroll up here. Sorry, get questions on Microsoft, and PG could continue to run. Yeah, so bringing back Microsoft and Procter and Gamble. So Microsoft consolidating, I believe, uh, Dylan, I mean, we looked at this. I can't remember the exact level, but I must have said something around, 400 and 405. That's still not there. I'm not too thrilled by taking a position yet. For me, the fact that it's still below the 50 and 200-day moving average, they're so very close. And of course, with markets already kind of knocking on all-time highs, this is I would say a relatively, from a relative strength standpoint compared to the market, this is definitely weak. So I would rather see if it can get to an entry of 405, 400 for me to even consider. Okay. Procter and Gamble back again, looking at this, it's gone higher, right? With I would say the rally, or I would say a recovery, sorry, of healthcare, a big continuation up. And once again, very much near, what is this, all-time highs? Yeah, looking like it. So very solid, very stable, not an entry though, for me personally. Personally, I like to always see a stock, not always, but I like to see a stock kind of a bit depressed or come down or sold off, of that sort, or maybe right around support kind of area for me to enter some of these. Okay. I do not like to enter off of price action like this, especially not after all this has occurred, and also as it kind of gets near all-time highs. Okay. But yeah, that can run. I mean, we saw a big recovery in this, and Procter and Gamble is not pure healthcare, diversified, I would say consumer staples in a way as well. So uh, kind of mix, right? It's a big conglomerate with different departments. So it will be interesting to see if this can continue. But yeah, great company nonetheless. Abhishek is asking AbbVie. So ABBV, this is one I will admit to missing. I missed this. I missed this. We did short puts on it, as elite members will know, but I missed a long on this. Now, obviously, one could argue that, well, Riz, it's still below the 200-day moving average. Yeah, it's recovered off the recent lows of 164, 165. Maybe, we could break above this 200-day moving average, break above 180, so there's still upside. It's a solid, decent company, has a little bit of a dividend as well, $1.55 per share, and that is, I believe, what are we looking at? What's the dividend yield? 3.7%, so not bad, right? So this is obviously healthcare recovery throughout this week as well. So this is an interesting one, right? Right where that gap, as we mentioned. So again, I do wish I would have taken obviously that hindsight. It was something I watch, but I'm like I want to see if it can hold. We had a bullish green day, and then I was like, okay, we have a couple healthcare stocks already that we're holding, right? As elite members know, and I'm like, let me see if we can get an entry back below 164, 165, and it didn't get there. It just rocketed, and then it went up again. So these two strong bullish candles essentially to me were like, dang, okay, we missed some of the, I would say, part of the move. Now I want to wait and see. I don't want to chase this. Um, BBY, Bed Bath and Beyond. Man, this one. Or is that right? Oh yeah, back then. Yes, okay, yeah, okay, I'm reading that. Yes, correct. Um, question from Jeffrey. TGT, Walmart, both retail, but very contrasting results, right? So this is Target. Target reported earnings, they had a miss, and then also very weak guidance for this holiday season. So not good at all. This kind of like a double whammy. And then if we contrast that to Walmart, Another retail. Obviously, I think a bit of a different, of course, retail. Walmart is very much a juggernaut, whereas Walmart went higher, right? They beat, and then it's only gone higher. With that said, I will say that Walmart, even before this earnings beat and whatnot, was already very frothy, very done. I'm surprised at the valuation it's at. Honestly, this and Costco, we've mentioned Costco before, we looked at it before. Obviously, the earnings catalyst was done some time ago, but this too has gone higher again. How just new highs, right? Every few days, it seems like. So both Walmart and this very rich in a valuation standpoint, very overdone from a technical standpoint. So where we see those differences between Walmart and Costco compared to something like Target, well, Target is, I would say, you can make a case for, I haven't gone through their deep financials, but you can make a case that they were a bit more, I would say, conservative or more cautionary on their guidance. Even Walmart uh, issued a little bit of caution, right, post earnings release. But of course, the market didn't really think too much of it. They shrugged it off, right, because they had great numbers. Target, on the other hand, by I would say missing, not I would say, but like genuinely missing earnings, not only from the EPS but also revenue, as well as being more cautious on their guidance. That I think was what caused the market to overreact. I think it was like a 22% drop post earnings. Yeah, 22%, right? It did recover on Friday. What was that? I think sub 2%. Yep, 2.8% recovery. So still big gap there. So this is something to keep an eye on, right? Maybe 180, 120, sorry, 120, 121 is the floor here for the time being. So this is interesting. But definitely, like you said, Jeff, there's a lot of euphoria going around, even in something like Walmart and Costco. It just doesn't have to just be semiconductors, right? But J&J, Jazz asking me about J&J, bring that up again. This too had a nice, I was looking at an entry for this and then I missed it. And then I'm like, let's see if we can get a recovery, sorry, a retrace lower. Didn't really get a retrace. It was a very indecisive. I remember looking at it on Wednesday and it was very indecisive candle, as you can see, that kind of a close to a doji, and followed by some bullish move on Thursday, and then Friday opened higher, right? That's the thing. It opened higher, closed lower than closed, but still uh very much up this week and knocking on that 200-day moving average. So this is also a good setup, a great company, obviously was oversold the week prior to this. I want to see if we maybe get it back down at 153 area to potentially consider an entry. The reason I've been more hesitant on entering is these because J&J is not a pharma per se, but consumer staples, diversified, very much like PG. But because we already have some pure play, large cap pharma stocks holdings, I kind of shied away from it. I was just a bit more hesitant, right? So that's my thought process on that. But let's see. I am continuing to monitor it, see if there's a potential entry there. Okay, Dylan asked me again, UPS. Okay, this is also languishing. Obviously, a bullish day on Friday, decent earnings, but very much pulled back post earnings, right? Look at that, like big gap up and then closed still high, higher than previous earnings, but then retraced a lot of that gains and then only has gone lower. And then we got some consolidation here at the 50-day moving average with the bullish day on Friday. What was it? A 2.63% bullish day. So very much at this, I think you can call this like a triple top if you want, a short-term triple top around 135. Very interesting, but a very depressed stock, right? Look at it as I move it down, right? A very depressed stock. We've seen these kinds of moves, they take a long time. This would be maybe potentially good for a swing, a shorter term swing where you get in, get out if it doesn't get to where your target is, because these things can drag out. right? These things can take a while to come back. And then when they do, you know, they do turn the corner, assuming they do. We are heading into holiday season, but there's some, you know, with Amazon effectively really pushing for their own logistics side for years, right? They've been developing that, their own logistics. And that's one of the reasons why some of these things like uh, UPS and even FedEx have kind of pulled back, especially UPS though, right? Because there's been that fear that, okay, a lot of the logistics, a lot of the shipping stuff was definitely Amazon being the biggest reason, right? And of course, we've seen a lot of shipping, like, you know, a lot of home delivery stuff, especially post-COVID, you know, even in Walmart, Costco, all that. So because of that potentially slowing down with Amazon being the biggest one, uh, due to them effectively trying to take a piece of the logistics pie themselves, having their own plane, their own stuff, that's impacted UPS. So definitely not going anywhere. Still a decent company, very depressed though. Excuse me. Um, Google. So yeah, Google is something we've looked at, and it actually pulled back this week on the headlines and concerns of a monopoly, but specifically when it comes to their browser monopoly. So Google Chrome is actually the uh, biggest and most used web browser. So, speaking of which, I am on Google Chrome too. So there's that concern there, and it just kind of pulled back. I think it's stupid. I think it's stupid the fact that the DOJ, Department of Justice, is even looking at this, I would say, browser monopoly, specifically, you know, technically a search monopoly as well. But I feel like they should be focusing on other things. There's so much more fraud. I mean, I'm not going to get into it because that will make this webinar another hour, but there's so much fraud and nonsense going on, and it just they should be focusing on other things like instead of a fucking browser, guys. Jesus, fuck. Anyways, that that's just gonna trigger me, right? Not trigger, but it's just gonna make me go on my rant because like I see nonsense every day. I see stupidity every day. I see euphoria and garbage and like just the things going on that really make you think like, where are the regulators? What is going on? Like everyone's asleep at the wheel. Like, are they even looking at this? Maybe are, maybe they're not. But then you see headlines and then you see more talk about shit like fucking Google Chrome being an issue with the monopoly. Like, I'm sorry, but like Microsoft Internet Explorer, as it was known before they fucking moved it to Edge, was dog shit, still is dog shit. You know how many times I've gotten a new computer and Windows and I'm like, how do I uninstall Internet Explorer slash Microsoft Edge? And I fucking couldn't because Microsoft doesn't allow you to remove it from their Windows 10 or Windows, you know, whatever Windows you're running. It's just like it's ridiculous. It's ridiculous, guys. I don't know how to tell you. I don't know how to tell you where the world has gone. I stopped. Yeah, I mean, I've given up on the world many times over, especially the last 4 years. But yeah, yeah. What can I say? Fucking Google Chrome. Bring it down. I have no position. Again, I do think it's Google. I think has been a bit of a sleep at the wheel. I'm not too big a fan of Sundar Pichai, which is the CEO. I mean, he was good, but I feel like he's just, you know, he's not a wartime CEO. He's not like Satya Nadella of Microsoft. He's not a killer. He's not, you know, like you could argue that they had a very much a search monopoly forever, and then Google search sucks ass, sucks balls. I'm sorry. Like, you know, it just sucks. Like, you know, there's a reason why people type in, hey, you know, XYZ topic and then type in Reddit after because they want real world actual, you know, insights and people's opinions and experiences. They don't want some sponsored fucking link that takes them to a site that's shilling a certain product because Google is getting paid for ads. Like, you know, like Jesus, come on. Like, you know, there's so much incompetence in this shit. Like, it's just unbelievable. And the buck has to stop somewhere. And I think Sundar has just been like sitting there twiddling his thumbs, trying to be all modest and shit. But like, dude, get a fucking move on, man. Okay. So yeah, okay. I'm gonna leave that there. All right. Like I said, there's a lot that's going on in the world. I don't do podcasts. I don't do this shit because I just fucking hate podcasts. I don't know if I ever will do a podcast simply because I don't like podcasts, and it just a lot of it is brain rot. A lot of it is just fucking meandering. Um, I'm getting in the chat here. Jeffrey's asking me to do BTC. Oh brother, do MSTR. Oh boy, guys, I can't for my own health. I can't. Otherwise, it's not gonna. I've realized I've taken too much stress maybe the past few years, or maybe it's all added up. So you know me, 33 and a half, going on 53 and a half. So, and that's my age, by the way. So in case people are wondering, right? It is what it is. It is what it is. I just honestly let shit play out. I see if it suits me, if it works, and if it doesn't, then it doesn't, and I just move on. Um, yeah, Dylan, thanks. Actually, it's pretty scary because a close friend of mine, his mom had a bad stroke, and she is not in a good state. So it's actually scary. But hey, I mean, nothing I'm not aware of. I'm faced with my mortality every day. But anyways, great having you guys on. Great, actually, a fantastic attendance. I appreciate everyone coming. Hopefully, you're learning and hopefully entertained too a bit. Uh, I like to have a mix. I don't want to be dry or just cut and dry or boring. I hope I'm not. Again, you guys be the judge. Thank you, Stefan. I appreciate it. Um, it's great. It's great to have this community. It's great to have. I know I've had some calls and talked with people in Elite, and I loved it. I love every minute of interacting with our members. And of course, for those of you that are watching YouTube or not in Elite, well, I mean that's something you're missing out on. So I really don't have much more to say. If you did want to, you'd be an Elite by now. So. Yeah, definitely going into the end of the year with just just going through it, seeing how markets go, seeing how life goes, and then hopefully 2025, which is really not, if you really think about it, it's just a day change. Obviously there's that mental component, a refresh, a reset, a restart, a clean slate, which is important, I get it, but in the grand scheme of things, does anything really change after 12 a.m. on a December 31st compared to a 12:01 a.m.? I don't know, right? Something to think about. Something to think about, right? Um, but nonetheless, thank you for being here. Thanks for joining. Great webinar, great questions. And for those of you that are watching, for those of you that are watching live, I appreciate you. For those of you watching the recording of the webinar, if you're an elite, thank you for watching. And if you're not an elite, please, keep watching, engage, comment. I keep asking for that. I appreciate that. I appreciate everyone kind of doing their part. And these webinars are definitely something people uh, tell me they like, they enjoy, and I hope they do. I hope we can see some positive momentum from a view count, from a subscriber count materialize. Hence, we will keep going with these, especially after we saw Chris move on from doing these. So I am here to hold and carry that mantle, and I'm hoping that I've done a semi-decent job, filling in Chris's shoes, but you guys will be the judge. Nonetheless, I appreciate each and every one of you. Thank you so much. Have a great rest of the weekend. Um, and we'll see how the last final month of 2024 plays out. Okay, guys, take care. Ciao.